Okay. Well, I want to be respectful of everyone's time. Our goal here is to keep this definitely under an hour, maybe even closer to 45 minutes, depending on how much Q&A we have at the end. So we definitely appreciate your time. We'll get started, and I expect that more people will kind of trickle in as we go here. Yes, thank you, Karen. We'll get to that. And Kevin, why did we make this call?
Yeah, I think one of the main reasons that we started chatting about this and putting this video out there for people to join us is because we understand that real estate and finances have a huge impact and stress in people's lives right now. So if sometimes just providing information alone can alleviate some of that stress. So we're just kind of here as an information buffer for you to kind of amalgamate some of the stuff that we can replace your Google search with a little bit, and hopefully get to some direct information that will impact you quicker than sitting on Google for a couple of hours and kind of seeing all this news about the skies falling. But at the end of the day, it's a different market right now, and we're just here to deal with that and provide information.
And we want to drill into what's happening in Ottawa for sure, because a lot of the news doesn't really say what's happening in our own city here. Yeah. And so we want to get down to the ground level, what's happening daily here in the Ottawa real estate market and the mortgage market. So, and how those two fit together. So our goal here today is hopefully answer your questions. And as Kevin said, if you're logging in here with some of those that worry or doubt or fear even, that you'll walk away feeling more knowledgeable, better equipped, and have more peace of mind knowing how to navigate this market wherever you may find yourself. There may be some here just interested, hey, what's the value of my house? Is it going up or down? Someone here might be thinking, well, I was planning on buying, but can I buy? Or maybe it's the other way. Someone was planning on selling and they're not sure they can sell. So this is kind of the time of year, the spring market, right? Where things normally get busy, and it's been definitely a different market for sure. With that kind of intro, I think let me give you I'll give a quick background and some context. Of course, we're all in isolation, working from our basements and home offices, and only the essential services are really going out to work for us. And I think they're really cracking down on that. I heard a birthday party got shut down and a huge fine. I don't know, some interesting stories coming out of the news now, but they're really emphasizing people, if you don't need to be out, stay in your home, right? We mean it when we say self-isolate. Yes, Karen, not mine though. And trying to stay home, self-isolating. Real estate, Doug Ford administration, just a little over a week ago, announcing the list of essential services. Real estate was counted among them that were allowed to continue with our work. So that was really good news for us, as real estate agents, and also really good for our clients. There was a bulletin that came out immediately after it, though, by the Ontario Real Estate Association, OREA, and it basically said, yes, we're listed as essential services, but it does not mean business as normal. And it means we have to do all they're strongly worded, basically saying no face-to-face meetings, period, full stop. So you may have noticed there's no open houses. The OREA sent out we are not allowed to do open houses. So if you don't see those signs out in the streets anymore. There are still private showings happening, but we have to be very careful with that. And we're just trying to amp up all the technologies so that we can do all this stuff remotely. And I have a story to share regarding that. So this is the time of year where things normally take off, but they haven't. So I'm going to throw some stats at you, because anyone who knows me knows I love stats. And where did that note go? This week, like last year in 2019, we would have seen 832 new listings. And this past week, we saw about 422. Okay, so roughly half of the same activity last year. And in terms of sold units, last year was 457 and this year was 259. That's just in a 1 week period. So roughly half. We're half as busy this time of year as we would be in a normal market. But I do want to show there's still stuff happening. People are still buying and selling. We're listed as essential services for a reason, because there's still people who have to move. I'll give the example. We had some clients who committed to a new home purchase and they're closing on April 30th. And this was all done before COVID hit the city. And then we get into it and everyone starts being told to self-isolate, and the worry and fear just boom, like what's going to happen now? The plan was always to sell their home in March so that they can get the money out of that towards the purchase for the April 30th closing. So now there's all that fear of, well, what's going to happen? Can I sell my home? I need that money. I can't buy that other home unless I sell this other one. And so that's a prime example of why we're listed as essential services. It's really intended to help those people who are mid-transaction. And if they were to be prevented from carrying on with those plans, you can imagine the result, right? Closings wouldn't happen. There'd be huge financial implications. It'd be almost like a domino effect, right? If someone doesn't close on this one, then the next person doesn't close, and the next person doesn't close. And it'd be a pretty bad mess to clean up afterwards. So there are still transactions happening, just at a much lower level. And the ones that are happening, we're having to take heightened precautions, no open houses, try to avoid all the face-to-face showings. Our last listing, we of course did the professional photos, we did the video tour. We actually did an additional video tour, like an up close and personal, so that you're not just showing the fancy glossy photos and the marketing stuff, but zooming in and really picking out even the defects. So people want to see, what's the plumbing like, what does the electrical panel look like, zoom in close on those floors, are they scratched, and so by doing that kind of detailed video walkthrough, it helps to people sitting at home on their phone or computer can now virtually tour the house have a better idea. And so we were able to eliminate, I believe, a lot of unnecessary showings by doing that. And we had only 7 showings on that one house. This was only 2 days ago we sold it. We had 7 showings. We listed on a Friday. We withheld offers until Tuesday. It was a 2-bedroom, 1.5 bath condo out in Orleans. We had 3 offers, all fantastic offers, eventually sold for $30,000 over asking price with no conditions. So if you've been following the market at all up to COVID, you would have known Ottawa market has been on fire. Like, you put a home up for sale and there's people rushing to the house to see it, and there's almost always multiple offers. Buyers are having to be extremely competitive when submitting their offers. So, and how do you make your offer look better? You have a higher price and the least amount of conditions. So we saw a lot of homes selling way over asking with 0 or little conditions. And so what we're seeing is it's still slowed down. The numbers show us it's slowed down to about half, but buyers are still being competitive. Those 3 offers were all over asking price, and they were all very competitive in conditions. It's just fewer of them. You follow? Can I get some thumbs up? Okay, let's go back to my notes before I rant on and on and on. So business is still happening, but it looks much different. Trying to do things remotely. Of course, we have, so the virtual tours I explained, we're able to do Zoom meetings like this, and all the paperwork is done electronically through e-signature. So we're really able to minimize the face-to-face stuff and to try to be socially responsible. Kevin, what have you been seeing in terms of from the mortgage side of things? Have you been seeing the same number of applications?
Yeah, so just to kind of mirror what you were saying is it's exactly that. Business is still happening, but it looks very different. And a lot of these things that are looking different, I really hope stick too. So there's some really good things coming out of this in terms of new systems coming into play, making things a lot more of a digital experience for people, which I personally like. Like even the Canadian Law Society has come out saying that they're allowing for electronic signatures on things as well. First Canadian Title and F&F on the mortgage side, who basically facilitate all the title transfers, are now allowing remote signatures and remote witness signatures as well, which is something that the technology has always been there, but the banks and legal firms and other entities involved in the transaction have been really slow to take those things up. And personally, I'm curious to see if those things carry through even after the COVID-19 stuff, because I think that those changes are good changes. On our side for applications, I've almost always worked digitally with applications and call meetings and everything like that. I still do face-to-face, but the majority of my stuff is done electronically anyways. Our applications, we're still seeing the same amount of applications. We're still seeing people going in without financing conditions. It is becoming less and less frequent, but they're still definitely doing it. And it's, people are still taking advantage of the market right now. So yes, rates are going up, but it's still a really good time in the market comparative to other years where rates are still incredibly low. Yes, they're higher than they were 3-4 months ago or even 2 months ago. But at this point, it's still relative. Rates are still really good. So people are still looking at not only buying, but they're looking at repositioning, refinancing, early renewals, equity takeouts, and the list goes on of things that people are still trying to do.
Awesome. Thank you.
Yeah.
You talked about rates. Can we go there?
Yeah, for sure. Like specifically, what do rates look like?
Yeah, because like the Bank of Canada has made, I think, 3 times in this quarter in a couple week period,
Yep.
changed their overnight lending rate, which is unprecedented, right? They normally make an announcement once a quarter and make a decision of, keep it the same or change it. And they've made 3 changes in a couple of weeks.
Yeah.
Tell us what's happening there.
For sure. So to go into that, I'll give a little bit of a background as to what actually happens with mortgages and mortgage-backed securities, or how the federal government kind of protects these loans that the banks are offering. So there's 3 types of loans. There's insured mortgages, where somebody takes out a mortgage, but they pay their own insurance premium, which would be like CMHC or Genworth. There's insurable loans, so loans that are being insured by CMHC and Genworth as examples, but the bank is paying those premiums, not the borrower. And then the third category would be uninsurable loans. So uninsurable loans would be banks that are lending based off of their balance sheet, so like deposits on hand. So now that we kind of understand that, we can talk more about what's actually happening with the Bank of Canada, what are the interest drops doing with the Bank of Canada, and how it's affecting the fixed rate margins. Because the Bank of Canada rate drops aren't necessarily your bond yields. Your bond yields are what are affecting the fixed rates. So those bond yields, because the federal government has concerns with the liquidity in the financial institutions because of the balance sheet lending and the uninsured portfolios, they had to come through and make some changes. And these changes are that it's called an IMPP program, Insured Mortgage Purchase Program. So essentially, the finance minister came through. They said, we're going to allow up to $50 billion, or not up to, they're allowing $50 billion to be able to buy back securities for the banks to insure previously uninsured loans. So when you have an uninsured loan, you're using that money based off your balance sheets, like we had mentioned before. Now that CMHC is now coming through and buying up $50 billion of these uninsured loans, they're able to take that off of their balance sheets. So essentially increasing the liquidity with the banks. So now essentially passing that risk on to the federal government for those insured loans.
Yeah.
So when we talk about the liquidity, now that opens up options for things we can talk about in a little bit more detail later, like the 6 months mortgage deferrals that's coming through for the COVID-19, people that are affected by the COVID-19. So these bond yields, so your mortgage rates are really closely tied to these bond yields. Right now, the bond yields for the bank and their profitability margins are actually higher than they have been in the past.
Yeah, because the Bank of Canada's lowered their rates, but I haven't seen the banks lower their mortgage rates.
No, so we're in that inverse market space where the banks have increased their rates because of this liquidity issue, and also because of other considerations like the actual financial marketplace as a whole, right? So before, if you look at what the banks are wanting in terms of profitability off of that bond yield to what they're actually lending money out, they're looking at a profit yield of say 1.24%. Right now, their profit yield is like 2.5%.
That's very good.
Over what's actually being lent on. And that one, yes, it has to do with the drops in the Bank of Canada, but they're increasing what profits they want to see on that money because of this increase in risk.
Yeah, you just gave us a ton of information. And you tell me if I interpreted this correctly. All that was to say the federal government has absorbed a lot of the risk, and banks are in a better liquidity position now.
Yep.
And they're in a stronger financial position to be able to hopefully pass that on to consumers as well.
Yeah, and continue to lend, right?
Continue to lend.
If you lock up lending in a country, it makes things really difficult for anything to happen, right?
Yeah.
Refinance, purchase
Yeah.
transactions, everything across the board. So you need that liquidity to be able to continue down this financial path.
Yeah. So we won't go too much deeper into
Yeah.
the economics, but this is your
Yep.
typical fiscal policy,
Yep.
helping to stimulate the economy.
Yep.
And that's also obviously we're in a recession. I think we can confidently call it. If you look at the stock market, that we can come to that conclusion.
Yep.
And this is the fiscal policy to that the government, the knobs and dials and stuff that they have to turn to help stimulate economy, lending, spending, all that good stuff.
Absolutely.
Okay. But you haven't seen a big change in mortgage interest rates. You've actually seen them increase. So it leads me to a question. Is it a good or bad time to get a mortgage right now?
Yeah, so good question. I think a lot of that has to do with a personal situation, right? So good/bad timing. One, we could talk about job layoffs. So if you've been laid off and you're applying for a new mortgage, you'll definitely have some difficulty right now, especially if you're repositioning, wanting to refinance, take equity out of your house, that kind of stuff. Not saying that there aren't solutions, but it is going to be more difficult with conventional lenders.
Right.
If you're one of the lucky ones who haven't been affected by any kind of layoffs or job losses, then the answer again is it depends on your situation. So if you're looking to save on an interest rate, if you're looking to build a cushion, if you're looking to get cash out to help family members who might be in a different financial position than you, then yes, rates are still good. It still makes sense to take a look at it. And we can run that cost analysis to see on your own personal situation, does it make sense to pay penalties or pay legal fees or take a bit of a higher rate than you might have right now, take a lower rate, and just kind of walk through those options to see whether or not it really makes sense.
Mm-hmm.
And if somebody has been affected by job loss, then there's other things. If you can't refinance your house, you can try to get personal term loans or unsecured lines of credits or something to kind of bridge that gap until the employment does come back on. And then we can look at repositioning again later once the employment is stabilized, and then consolidate that back into the mortgage if need be.
Mm-hmm. So, because there's no denying that a lot of people have had job disruptions, layoffs, reduced hours, and so on. And so, yes, that will impact buyer demand, right? There will be, during this period of time until employment goes back, it'll decrease buyer demand. That should put a little bit of downward pressure on price really in the Ottawa area or anywhere. But that's not the only variable, in my opinion, right? There's lots of variables that play here. But that is one of them, that it could cool the market off a little bit because maybe a buyer qualified 3 weeks ago, but they no longer qualify.
Yep.
They had a job interruption.
Yeah, and I had one of those questions posed today as well to me by a client who was going through this layoff. They have their house up for sale. They've been laid off. They're still looking, and they're trying to figure out, do I still try to sell my house, right?
Yeah.
And I'm honestly, I was still looking for more information on that too. Like, are banks still going to honor pre-approvals? Because I know if there are job losses before a certain date and the bank already has the application, they're honoring that income. But on pre-approvals, are they honoring that income on temporary layoffs, as long as we can show it's temporary? So I'm waiting on more clarification on that, but I'm hoping that there's going to be some stuff that comes out to help those people as well.
So I'm going to tell me if I interpret this correctly. If someone had a firm purchase already and they had an approval already locked in, even if they've lost their jobs, the banks are going to continue to honor that. It'll still close.
Yeah, I've got quite a few of those right now. There's a couple of additional things that the bank's looking for is they'll still want verbal confirmation to see that if it was a temporary layoff, right, as opposed to being fired or losing the job completely. They'll want to see that you're on EI as well. So they'll want confirmation.
But that won't change they have to honor the contract though, don't they? Regardless if it's a temporary layoff or a permanent layoff?
Yeah, it's just more protecting against, like, if it wasn't a layoff and they were fired from employment or something like that, they want to make sure that it was a layoff and not an actual job loss.
Okay.
Yeah. So there are contingencies in place for that. I think that the cutoff for that was they had to have the application, I think, before March 25th, before all of this stuff really hit hard here.
Yeah.
And the offer had to be accepted before then, and the bank had to approve the income before then as well.
Okay.
Yeah.
Understood. Great.
And that's
Thank
not
you.
every bank, that's some.
So if by chance there's someone on here who needs more information on that, is my pre-approval still good? They can
Yeah.
contact you
Yeah, absolutely. My information is right at the top of the group chat.
at the group chat. HR, there is really no such thing as a temporary layoff. Either you've been laid off or you haven't. Thank you, Karen.
Yeah. So we actually had a couple getting letters saying that it was temporarily laid off, or that when the layoffs are done that they were going to be sent back. I have no idea how they were wording that. That's just what they told me their employer was offering.
Okay.
But very, very good point.
Yeah, on your record of employment, there's no box for temporary.
Yeah, and that's what they're offering too, is that they're asking for that record of employment to show the layoff, and then they're looking for the EI, and a lot of times they're looking for somebody that they can speak to verbally, like a manager or somebody at HR. It depends on the size of the firm, right? Because some companies are only a few people large, and then others you have hundreds and hundreds of employees. Yeah, so they're often looking to speak with somebody as well.
Yeah, for sure, because they want to know if it's for cause.
Yeah, absolutely.
Okay. Thank you, Kevin. I think we're kind of ready to move on to our next topic here, unless someone has a relevant question they want to pop in right now. I appreciate Karen's input there too.
Yeah, absolutely.
Can we talk about the different relief programs, specifically this mortgage one?
Yeah, so the main relief option right now is, we kind of touched upon it earlier, is that 6 month of mortgage deferral payments. So it's still being treated as a case-by-case basis. It's not a given that you're going to be getting it across the board. So that's essentially, it is what it sounds like it is. The banks are offering you to defer your mortgage payment for upwards of 6 months to kind of relieve the stress of your home, so that you can use it for other things that you need for living expenses, groceries, whatever your individual situation might be. I still urge people to only use it as a last resort, because it does have its expenses, which we can get into in a second. And I also said that a couple of other things that might help you is if you're doing things like if you're doing an accelerated biweekly or accelerated weekly schedule on your mortgage, or if you've increased your mortgage payments by your prepayment privileges, anything of the sort, you can also try to back out with the banks and bring your payments back down to a base level to try to ease that, because there's no need to really accelerate your payments through a crisis. You can kind of back that back down to where it needs to be before having to do this deferral.
Right. So I was going to ask, is there a reason why we wouldn't do it? And you talked about some expense.
Yeah.
Tell us more about that.
Yeah, so the expenses are essentially whenever you defer a mortgage, you're also deferring the interest on that mortgage for the most part. So when you defer interest, you're tacking it onto the back of your loan. You're actually paying interest on interest. So to kind of give some real numbers for like a skip a payment calculator type of thing, if you had a $2,500 mortgage payment at a 3% rate and you had 20 years left in the amortization, and you did the full 6 months of skips, what would that look like in terms of cost to you over the remainder of the amortized loan?
Oh, I know compounding interest can be scary sometimes. All
So,
right, hit us with it.
Yeah, so from you skipping those six $2,500.
So 2,500 times 6 is 15,000.
15,000, and it'll cost you just over $11,000 over the amortization of the loan.
Okay, so it'll cost you $11,000 to defer $15,000 of payments.
Yes.
So the 15,000 is actually costing you 26,000.
Yeah, it's expensive.
Right.
And that's why I say it's there as a measure of support. And if it makes a difference of you going into default on your loan or not, definitely do it. Or if it's something that you need to use it for other things, right? Like if you need groceries, defer your payment. That's exactly what it's there for. It's a relief option. But leave it as a last resort, but definitely get ahead of it as well. So make sure you're doing it before you fully need it, because it takes some time to process. You can't do it a day before your mortgage payment comes out. You need to be doing it, say, a month before.
A couple more questions. Karen has one. If a parent wanted to make a mortgage payment for a child or a friend, could they make it directly to the lender who holds the mortgage, or do they need to give the money to the mortgage owner and trust them to make the payment?
I would say probably the second part of that statement is more likely, where you'd have to individually transfer it to that person so that they can make their payment.
It's likely it comes out of a bank account automatically, right?
Yeah,
And you
because
shove it in that account.
exactly all mortgage payments, for the most part, are set up by pre-authorized debit, and they're linked to the debit account of the mortgage holder. So I don't think that somebody can make an outside payment for them.
So I have some experience in that. I used to be a financial advisor at TD Canada Trust. So I've had experience where if someone's going to default on mortgage payment, chances are they're struggling financially across the board. Their credit cards are maxed out, their bank accounts at zero or even negative. And so if someone were to put money into that bank account, it's just going to fall into the black hole, and it won't even be enough to actually pay for the mortgage payment. So I remember as a teller, you could go up to the teller and make a payment.
Okay.
So do you need to be the mortgage holder, or can just a loved one, family member, someone go up to the teller and make a payment? I don't remember that answer.
Okay.
I think it can be done. I don't know.
Yeah, I think it would be.
I wouldn't complain if someone made a payment on my mortgage unauthorized, right?
For sure. And I think it would be bank specific. Like every bank has their different back end systems that they'll use for actually collecting payments, and whether or not they're going to have the ability to collect a payment. Like there's a lot of banks that don't have branches, right? So you won't be able to go into a physical branch and do a transfer.
Yeah.
And I don't know if their call center will be able to handle pulling a payment off of somebody else's account.
Right. Marguerite, I see your question. We'll return to that. There's a couple of questions by Sandeep, and Karen had an earlier one as well that we haven't answered, so I haven't forgotten those. I want to stay on this relief thing a little bit longer.
Yeah.
How do people go about getting it?
So I can provide a list as well. I have a Google Doc with a lot of the top banks across Canada with all of their 1-800 numbers if you had to call them to their call center to make those relief requests. There's a couple of banks also that have online portals for getting your deferrals done, and it kind of saves the 2.5-hour wait on a phone, because as you can imagine, a lot of the phone lines are jammed up with the banks across the country.
Yes, they are.
Just the 6 big banks alone have processed over 213,000 deferral requests since it came out. So
yeah, and that was like less than a week, I think, isn't it?
Yeah.
I wanted to have some knowledge on this as well, so I called my contact at the bank, and I was at my mortgage is at Scotiabank. Thank you, Kevin, by the way, for hooking me up with that. And I didn't try to call the 1-800 number because I heard exactly what you said, Kevin, that the wait time could be horrendous. So I had a personal contact at my branch. And so I emailed them, and they called me within minutes, and they asked me 3 questions. And that's basically the application process.
Yeah.
So I haven't pulled the trigger on it, but it's just, if you want it, you call it. It'd be better if you had a personal contact at your branch.
Yeah.
And they'll just ask you 3 questions, like, has your employment been impacted by COVID? Yes or no?
Yep.
So it's pretty straightforward, but the difficult part is getting through to someone.
And it has morphed a little bit too. When it first came out, it was really difficult to get it on secondary residence, or if you own more than one property. So now there are certain banks that are offering on more than one property if you have rental properties. So it does give relief for those things as well.
Awesome. Last question. Will it affect people's credit history?
Yeah, so the long answer on that is these are very unprecedented times. So these kinds of things haven't really been done on a mass scale before across many financial institutions. That being said, no, it should not affect your credit, because if it did affect your credit, it would negate any purpose of doing any mortgage deferrals or payment reliefs or anything like that, because it'll hurt people's credit down the line, so that it'll make it difficult for them to get mortgages elsewhere. It'll make it difficult for them to get credit, lines of credits, car loans, whatever loans that they might need. So a lot of the banks, or I would say all of the banks, will not be reporting this as a missed payment. I have had one bank come out and say that it will not, for sure it will not affect your credit, but they put a little caveat in there saying that only if your mortgage is not currently in default. So I would say, kind of internally, if they're already saying to the credit reporting agencies like Equifax or TransUnion that your mortgage payment has been missed, once you do those referrals, it'll continue to show as missed because you're not bringing it back up to date. So I would bring that up to date before you do any kind of deferrals.
Okay, and it'd probably be prudent to check your credit history.
Yeah,
Pull an
and
Equifax report.
for sure, and check with each individual bank as well. So whether or not you're with the big red bank or the big blue bank or big green bank, just make sure you're calling them and just getting that verbal verification that no, it won't be reporting as a missed payment, it is a deferral, and just try to get that extra level of security for yourself.
Okay. So as a quick tangent, how does someone get a credit report?
So we have tools. You can do it. We have an app called Mopolo. So you can actually get your own credit reporting score. You can call Equifax and you can get your own score there. I think it's still for free if you do it once per year, once every 6 months. Same with TransUnion. So there are apps out there that I can provide that you can get them.
And if someone needs help, contact you.
Yeah, absolutely.
Okay. Any other questions on the relief? I think we're going to go back to the top of our question list.
Sure.
So I think that thank you, Kevin. I think that we covered off a lot of stuff in there. We talked about like mortgages in general, interest rates. Is a good time, is a bad time? Mm-hmm. The applications that you're seeing. We talked about the relief program. We're going to go back into a bit of real estate conversation. And Karen had a question earlier. Where was it? So your son is planning to buy in about a year. He's wondering about condo prices. Will they drop, stay the same, or increase? Let me look into my crystal ball. No, I don't. It's a complex answer. My gut, so as a real estate professional in the business for about 10 years, I do see some downward pressure in buyer demand, like we talked about, because of job layoffs and stuff like that. But I think in Ottawa in particular, we've been such a seller's market. And when I say seller's market, our level of inventory is so ridiculously low that I don't think a few buyers falling off the bandwagon, so to speak, is going to impact that momentum as much. It'll cool it a little bit, but I expect when this kind of settles out, I believe the Ottawa real estate market will kind of resume where it left off, but maybe not as rampant. I still feel that prices are going to continue in an upwards trajectory. I don't think it'll be at the 21% that we saw year over year last month. But it wouldn't surprise me to see double digits percentage increase year over year, like from 2020 to 2021. I don't have a crystal ball, but I believe prices will continue to go up. I also believe with all this fiscal policy that we talked about, and again, I won't go too deep in economics here, but the government's going in a lot of debt. And when debt happens, it's like printing money. And this is an interesting thing, but for a topic for another day, but this whole idea of inflation isn't the cost of goods going up. Inflation is actually the purchasing power of our dollar going down. And I believe the long-term effects of these relief and packages from the government, these bailout packages, I'm sure we're going to see several of them. It's basically printing money and it devalues our dollar. And it's going to happen across the world. So there's a complex forces here at play. There's people have been laid off, lower buyer demand. The dollar's going to fall down. That raises our prices. And I also believe that the real estate market here in Ottawa, locally, we're so far behind in inventory. I still think we're going to have upward trajectory in pricing. So where will condo prices be in a year from now? I'm expecting 5, 10, maybe a little bit more % higher than where they are today. That's as far as I can see it. And yeah, I hope I answered that one.
That's a good answer.
Sandeep asked, I deposit $10,000 last month and booked a stack town home in Canada. Now I have to pay $10,000 for the next 5 months. What should I do? Should I cancel that deal or keep paying for them? I would keep paying for them. If you were to buy a new build right now, I think the waiting time is, Kelly can pipe up because she knows new builds better than I do. But what, a year and a half? She's looking for the
yeah, I have some that are 2 years out.
2 years out. So if you were to walk in a sales center today, Mindo, Mattamy, Richcraft, any of those, and you say, I want to buy a home, they're going to say, great, we have a closing for you in 2022. So they're really far behind, and that speaks of the lack of inventory. Like, this is how deep our inventory problem has been, where the builders are 2 years behind. I still think home prices are going to go up. So if you secured a home and you've made a $10,000 deposit 3 months ago or something, I think you've done well. And I think as an investment, even that home will continue to appreciate. I would keep making those payments because you're not going to get another home for a long time. And I wouldn't lose that $10,000 deposit either. Kelly,
There was
anything to add?
a lot of people that weren't so fortunate to score one of those new builds. So I think you're in a good position, and I probably like say the same thing as Dave. I'd stay and definitely keep going with that.
All right. And then Marguerite asks, is it possible that banks will change the minimum requirements for land purchase? For example, instead of having to put down 35% for barren land, could someone put down 5%? And to add to this question, could this be combined with a construction loan? Kevin, you're up.
Yeah, so the quick answer is no. I don't think they're gonna lighten the rules on vacant land, mostly because of the resaleability of vacant land is a lot harder for the banks, and it's not insurable. So insurable, once again, it means that CMHC or Genworth has to be able to back that loan, and they won't back vacant land. So you have to use balance sheet lenders, and balance sheet lenders or alternative lenders want 35% down, sometimes 50% down. Some credit unions won't even do a mortgage on them. They'll just simply do it as a term loan. So a term loan would be similar to like what you'd get on a camper or a vehicle. So I don't think that they will be changing that. Can it be combined into construction loans? Yes. So construction loans work a little bit differently in the sense that whenever you buy something and you're doing a new construction on it, they'll finance you back on that land value. And every lender is a little bit different. So if you owned that property free and clear, or you had a small mortgage on it, and you start your build process, when you're within that 6 months of being able to be completing that property, they'll finance you back up to 80% of that land value as your first construction draw, so that you can start doing your foundation, putting your walls up, your roof, windows, Tyvek, and then the rest of the financing kicks in different stages.
Awesome. Kevin, you know what I appreciate so much about you is how thorough you are. I'm going to try to summarize that as well. So what I heard is land is basically uninsurable. It's riskier for a bank. If someone defaults on a mortgage on a land and the bank has this asset on their hands that they don't want and they have to try to liquidate it, and it's harder to get off their hands and recover the money. So for that reason, they're not willing to go as high loan to value. They want a larger down payment. That's why the 35% down. Right?
Yep.
Okay.
That's right.
The new build price for townhomes will go down to 450K or no? Question for Dave. Right now they are almost 500,000. I don't think they're going to go down. I think they're going to continue to go up. Because another thing to consider is you buy a home today, you're buying a home for 2022 with 2020 pricing. And that whole, I know of investors right now who are buying new construction builds. They're putting their $50,000 deposit, like Sandeep's example, which is you're highly leveraged. That's only 10% down, right? You're buying a $500,000 house with $50,000 deposit. You have 10% in the game. And then in 2 years, when it's actually constructed, they're anticipating that home to be worth $600,000. So they've made $100,000 on a $10,000 investment. That's a 900% rate of return. So I would say, sorry, that's what is it, 1,000% rate of return?
On a $50,000 investment.
On a 50,000, thank you, Karen. So let's say a 200% rate of return.
Not quite
200%.
900, but
Not quite, but still 200. I got lost in my numbers. Thank you, Karen. So I would keep it. I don't have the crystal ball. I think the prices will go up. Did we miss a question?
I saw one here from Chantel. I was thinking of pulling out some equity of my primary residence to purchase a rental. Is it a good idea? So one, it depends on how much usable equity you have in your house. So there's two types of equity. There's your equity of what you would get out of your property if you sell it. And then there's your usable equity of how much money you can get out of your house if you were to refinance it. So when you refinance a property, you always have to leave at least 20% of that equity behind. Is it a good time to be restructuring to look at rental properties? I would say definitely yes. Rental properties are a great investment. Personally, that's what I think. You can position yourself to be able to look on the market, get some cash out, wait for something there, wait for tenancies to stabilize a little bit right now, and jobs to come back. And I think that over a long period of time, rental properties are a great way to build wealth. Pulling money out of your owner-occupied property has other things for you, like certain tax deductions for if you pay any legal fees, refinance costs, appraisals. The interest you pull out from that money to use for investment purposes are all tax deductible. And now you have somebody else paying off a property for you that hopefully will continue going up in value, and somebody else is paying that for you. So do I think it's a good time to do it? Yes.
From a real estate point of view, rentals are a funny thing right now. With the economic climate, there's a lot of talk that tenants are going to be hit hard. Mm-hmm. They're often not in as financially secure position as homeowners. It is expected that many tenants won't be able to keep up with their payments, their rent payments. Mm-hmm. They are, I'm going to get the words wrong, but they basically can't enforce evictions during this time. So April 1st, there was a lot of chatter yesterday. Are tenants going to pay their mortgages? Because they hear in the news, I don't need to make my rent payment. Mm-hmm. There's no consequence. They can't kick me out. What they don't understand is it'll catch up with them. It's still due. They just can't be evicted now. And when this settles out, if they haven't paid their rent, they can be evicted later, and it's going to cost them more then. So they don't get away with it, right? But depending on how long this goes for, there will be some rental properties, like the small mom and pop landlords, who won't be able to afford to hang on to the rentals.
Yep. And
so we may see a small dip in some rental homes. Now, that it sounds good, but you may not want to buy them either, because they have people living in them that don't want to pay you rent, and they're maybe not the best tenant to inherit. Inherit? Yep. You understand me. Yeah, so I don't know is the answer from a resale point of view of pricing. I think there will be a lot of landlords who get hurt during this time, and I think there'll be some offloading of rental properties.
Yeah, I would agree with that too. And you can offset that by having a good cushion in the property. And a lot of it with rental properties, it's really hard to make rental properties in a short term, right? If you're looking at it under a long-term hold, I think that in the long term, it's not necessarily timing in the market, but it's time in the market. So if you have a rental property for 10, 15, 20 years, I think a lot of these things are short-lived. And if you can weather the storm, yeah, it'll depend on your financial profile. If you're stretching it to buy a rental, probably not. If you're very comfortable in being able to purchase a rental and can budget for vacancies, a high number of vacancies or lack of rent payment, then it could be a different story.
One of the rules in real estate is you make your profit on the buy. Okay, so, and you know the old adage, buy low, sell high. Mm-hmm. The smart investors know how to buy in a low market. We are not really in a low market. We're kind of, well, it's also not, when's a good time to plant an oak tree? Right now is the answer. So the best time to have bought a rental would have been 5 years ago. What I'm trying to say is there's opportunity. We need to look for it. If you can be patient, get your financing in order, talk to Kevin, have all your ducks lined up in a row, and then talk to me, and we'll keep our eyes and ears open for the right rental property for you, so that when we spot the opportunity, we're ready to act. Okay. Hey guys, this has been awesome. I see some chatter between Chantel. Thank you, Chantel, for that testimonial, because that's exactly what I was just describing. Yeah, you may be right, Karen, that new builds will be delayed. So right now, construction workers are still essential workers, and they're still on the job site. That may change. If they make a change to who is essential workers, that could have significant delays in new construction builds.
A note on that with what I'm seeing on my end too with new constructions. is Terry on. I've had many clients right now that have been issued notices for unavoidable delays with Terry on. So essentially, the unavoidable delay is saying that there's unavoidable circumstances, your property may be delayed, and there's no real timelines as to when it may or may not close. So they're preempting a lot of these things right now for potential delays in what I'm seeing on my side.
Awesome.
Yeah.
Any last questions? This has been fun. Hope you guys got some benefit out. Can I see some thumbs up or waving for those? Yeah, everyone. And so I think we'll sign off in a minute unless we have any other questions. But just remind everyone how to get hold of us. Check out the top of the Zoom chat.
Yeah, I believe Kelly just copied and pasted it too.
Okay, thank you, Kelly.
Yeah.
Oh yes, there you go. Kelly, you're so good.
On it.
You know what? One of the things we didn't get into today, and I was hesitant to bring it up. If you are in mid-transaction, if you have a closing coming up and you're concerned will it close, if you are, there's a lot of chatter right now. What if the banks close? What if land registry closes? And April 30th, my previous client example, what if on April 30th land registry is closed and no one is there to actually physically do the transfer of deed? What happens? So if you're in that scenario, I welcome that conversation. We can maybe do that offline.
Yep.
Unless there's enough people who are interested. It gets really legal though. The short answer is if you have a previous contract, it'll be done in best efforts. Reasonable efforts must be made to close when the banks or land registry reopen. Mm-hmm. If there's new transactions being written, there's a lot of state of emergency clauses that realtors are adding to their contracts that have different implications. Yeah. Okay. Thank you so much, everyone. This is kind of the first time we've done a live Zoom seminar kind of chat thing like this. And I really appreciate all of you taking the time out of your day. Hope you learned something. And Kevin and I and the whole Life Real Estate team, we would very much welcome your referrals and introductions. So if you know of someone who may have questions about real estate, if you know of someone who's looking to buy, sell, or invest in real estate, maybe someone looking to refinance a mortgage, we would very much welcome your introductions, and it's the lifeblood of our businesses. So we appreciate you so much. Thank you, guys.
Thanks a lot, guys.
Okay, we'll sign off.